Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Tuesday, March 11th, 4:45 p.m. Eastern Time. Coming to you with tonight's Revere Roundup Daily Market Insight video. Market state, we're still in a moderate correction. And if the trend gauge over here, not much has changed. Market leader is still red arrow. We are trading below the 21 EMA, trading below the 50-day simple moving average, and then small, mid cap, the Qs, and the S&P are all trading below the 200-day moving average. And then keep an eye on the Dow. That's slightly below, but we'll see how it reacts tomorrow to see if it can reclaim. It's about 1% below the 200-day right now. Um, Basically, what happened today, well, growth outperformed value, and that was good to see. A little bit of character change. And as the indexes were making new lows of the day, there was slight relative strength in some of these growth names putting in higher lows, but nevertheless, still not great action, just trying to find the silver linings in an ugly tape. And bunch of news again, very volatile day, and kind of all eyes on CPI. Maybe that can prompt a rally from here. We'll see tomorrow morning. Big Eight finished the day up 0.89%, and that's another thing that was largely helping the market on the bounce today, although we did have an ugly close red. RG8 up 0.37%. And then 60/40 down 0.47%, and GROTECTION down 0.15%. And you can see equal weight was noticeably weak as well today, down 1.33%. All right, let's take a look at the interasset correlation. As always, charted the S&P 500, and just still the tape still remains heavy, struggling to find buyers. And I think everyone, you know, senses the market's oversold, but that doesn't mean it has to bounce, but definitely kind of in no man's land, right? Pretty oversold to be initiating new shorts here, but also no sign of reversal to be taking long. So definitely a market to observe and, finding other areas of the market that isn't, equities um, that are looking good. And I'll cover the silver trade later in the video today. But still below the 200-day moving average. That's risk off. 5,500 is a big psych level. See if that can hold. And then and then 5,400's the next psych level down here, which was the higher low off here. So we'll see. And just pull up an intraday chart. I mean, just super the ATR has been changing, Um, down move off the open, kind of weak wedging rally, flush to lows, and then some more tariff news hit prompted a big move up into the end of the day, and then close basically gave back 50% of that move into the close. Take a look at the weekly. The 10 and 20 weekly moving averages are crossing, and that typically isn't good. That's happened, back here in 2022, in 2020. So that's something to keep an eye on. And the slope of these weekly moving averages are starting to turn down. So just something to be aware of. Not the best look. RSP getting smoked today, breaking this range lower below the 200-day. Nowhere to hide in this market right now. Q's minor relative strength today, only down 0.24%, but again, it's very weak bounce given this decline. And take a look at the 60-minute chart, and it's just, you kind of got a downtrend line here. Just multiple failed rally attempts, just still can't get back above. So we'll see, like I said, we are oversold, but doesn't mean we have to have a meaningful bounce. And then the weekly, similar thing, the 10 week is crossing below the 20 week, and, we're below the 10, 20, 30, 40 week moving average. Mag 7, these were kind of trying to lead today on the bounce, but again, just tight inside day. Really need to get back above these Monday highs to really get something going. It's still below the 200-day. Dow, this was noticeably weak today. Kind of saw some rotation out of safety as well today. Apple was down 4% at the lows, breaking the 200-day moving average as well. Mid caps, again, no love for anything risk on, growthy oriented, continues trending lower. Russell 2000 trying to hold at this 2000 level, but again, rather weak bounces. No love for stocks here. ARC just absolutely crushed, continuing lower below the 200-day moving average. FFTY, similar story here, living below the 200-day. The VIX, came down a little bit, but still staying elevated. That 27 level is a two standard deviation move. So potentially, would love to see this start to come down, and that tends to trigger, a short squeeze for the indexes once the VIX starts to cool off, and that sometimes helps lead the way for a market bounce. But as long as this is staying above 25, just expect more volatility, bigger intraday ranges, and just a harder time to hold stocks. The dollar continuing lower here. Gold setting up really nicely in the space. We added on to this one today, just continues to outperform. Gold stocks setting up really nice in this cup and handle base. See if it can break out here. Silver, we bought this one today, and this is coming out of a beautiful cup and handle base. Look at this relative strength. It's breaking out of a huge base. Obviously, we took it out of the videos because in this period it was just underperforming the market, and now price is saying different. This is starting to hook back around, and this one is probably one of the best looking bases in the market right now. Trying to break through this downtrend line. Look at the weekly. I mean, the weekly looks fantastic, multi-month base, monthly as well. This one looks really good. So see if silver can continue to move higher and kind of play some catch up to gold. And another thing I wanted to mention is the the silver to gold ratio is pretty out of whack. I've got a chart of this today to show, and basically, historically, the normal is, 40 to 60, and currently it's at 89. And last time it was this out of whack was in the early days of the pandemic, as you can see here. So this is another thing, and this ratio could signal that we're going to see some nice outperformance in silver compared to gold in the coming months. So price obviously is there, and this just is another little indicator to add some conviction. So I thought that chart was worth it to show. All right, back to the charts. Take a look at Bitcoin. You know, nice bounce here today, up 5% off the 150-day and trying to reclaim this gap. Good action here, but still a lot of overhead to work with. And, most of these stocks are just kind of in downtrend, so they have to prove themselves from here. Bonds kind of rejecting at the 150-day TLT, kind of just consolidating here. The recession fears continue. This should continue higher. Rates trying to pop back up here as well. All right, that's the interasset correlation. We'll take a look at the tail of the tape. Let's see. Fear and greed, we're in extreme fear. Keep an eye on that. Sometimes when that can mark turning points in the market. Big news. Wednesday, tomorrow, we have CPI in the morning. Also, there's just a bunch of tariff headlines left and right today. Just hard to keep track with everything. Thursday, PPI, and then next Wednesday, FOMC, 95% chance no cut. Going into today, the keys were the S&P versus the 200-day, still below. The Qs versus the 200-day, still below. And the S&P S&P 500% of stocks above the 5-day moving average. That's nearing oversold. I'll also show a chart of that, and you can see, this is coming down in the bottom of the range. Ideal world is this flushes down to single digits. When you look back, that's usually been the best time when this gets into single digits for a real reversal to happen. Getting oversold, though, that's good. Some more signals that, hey, the market might potentially try to bounce here, but if this gets into the single digits, that could mark a short-term low for the market. All right, that's that. Down 9 out of the last 13 days, 13 days below the 8, 13 days below the 21. Sectors wise, Bitcoin, silver, software, gold, all strong on the day. Weakness, home builders, staples, industrials, financials, utilities, regional banks. So again, just still lacking to see that broad participation. GROTECTION today bought silver, added to existing gold GLD position, and then trimmed some of the SPLG. Bottom line, news-driven volatility persists. Can CPI spark a rally? And then going into tomorrow, still watching the three same, and then the CPI reaction. If it's is bad news going to be bad news? Is bad news going to be good news? Those are kind of the scenarios. Obviously, the print matters, but to us, the reaction is always the most important thing, and we'll see what the reaction is tomorrow morning. All right, back into some charts. Um, I covered silver. One thing I want to say, so I talked about growth versus value, and so you can look at SPY-G. This is the S&P 500 growth. This was red, closed red on the day, but outperforming SPYV, which was down 1.46%. And that's that little silver lining that I talked about. Some growth names put in higher lows when the indexes was making lower lows, and then you can also look at VUG. This is Vanguard growth down 0.29%, and then VTV, Vanguard Value, down 1.22%. And then you also saw like a dividend ETF, SCHD, this one hard reject back below the 8 and 20, or sorry, the 50 and 21 day, rejecting at the top of this range. And then you also had consumer staples down as well, rejecting this high. So, if the market wants to balance, I think it's good to start to see some rotation out of these ones back into tech and even Apple, which has been strong recently. This one got hit today down 3%. And initially, this was kind of trading with the value safety sectors, but with them coming down, Apple came down today as well. And then another thing I wanted to mention on the S&P 500, right? All right, let's pull the SPY for this. So, one sec. So currently 9.3% off the highs, and the intraday low on the S&P 500 was right at that 10% today. So found a bottom today right at the 10% correction. So that's something to be note. And then another thing is the 8.5 low is August 5th, which was the yen carry trade. The low on that day was about a 10% correction from the highs as well. Then you look at the Qs. Obviously, this has gotten hit harder. This is now almost 13% off the highs. You look at IWM, 18% off the highs. This is nearing bear market. FFTY, good proxy for growth stocks. We trade 20, almost 23% off the highs. So, there's been carnage in individual stocks. I mean, look at Reddit. This one's down 46% off the highs. Look at a name like Palantir, 37% off the highs. So, stocks have gotten crushed. There has been some cleansing. So, but when you get charts like APP or Palantir, these take months to weeks to repair. Palantir is a little bit better, but when you got the best uptrends occur with positively stacked upward sloping moving averages. And when the alignment gets all off, it can take weeks to months to repair. And this is when it kind of tends to lead a lot of frustration, right? You're thinking you're getting a rally here, then it gets smacked by a moving average, or you're filling unfilled gaps, then coming back down. Just generally a lot of volatility. And that's why in these times, it's better to focus on places where the uptrends are occurring. You look at SLV, this is a very clean uptrend. You look at gold, this is a really nice uptrend. So, all these big institutions that typically long only, they don't really go to cash. So if they're rotating into something, and it's kind of our job to find out what that is. Since the 21 over 21 list is under construction, let's just take a look at this Revere 50, which is now Revere 63, but just some names that we're tracking. They're not all necessarily above the 21. Given the pullback, some of these names aren't going to be able to hold the 21, but nevertheless, some names that are holding up. And so we're China. This is another area of the market that's trending really nicely. This KWeb still looks really good, looking for entries here. And you can see leading on this list today is XPEV. This is a China EV, and pretty unbelievable move here, just ripping right up the right side, pretty extended, but just huge buying there. LI, another one. This is trying to come out of a nice base, super strong. BABA, another one. This one's forming a really nice flag here at the highs. See if it can push back through. Lemonade, this one's another, growth one that's holding up pretty well. You have a lot of strong stocks in the insurance industry group. Root, that's another one. Lemonade. So keep an eye on these ones if the market starts to turn. This one's coming up against a pretty big downtrend line. Futu, another China one. AEM, this is a gold miner breaking out of a base. GDX, talked about that. Nutanix trying to hold the 150 day. Silver, and you can see already the top 10 of the list consist of gold, silver, and China. And that's basically where all the money is flowing right now. Helmet, this one's held up pretty good, trying to stage a reversal off the 50 day. Zscaler just in a big range. Alert set if it can break out through those highs. KWeb, Doximity, coming back to the high of this base. Penn, upside reversal today. INOD, volatile one, pulled back pretty sharply, but still trying to hold the low end of this base. Okta, this one's building off that earnings gap. This one's flagging really nicely, and if the market starts to bounce, I think this one could lead higher. TradeWeb, this one's got a nice looking base. GLD, Felt Morris, this is a staple. Defensive name, pulled back to the 21, bouncing. Take two, another one, So, there are some names that are holding up decently, but, not the cleanest setups. And, you never have to be the first one in the market as it comes off the lows. There'll be plenty of opportunities and, you just don't have to, there's been a lot of people trying to catch the low and it just continues lower. So be on the lookout for a nice reversal. Getting back above the 200 day would be a step in the right direction. And then, a lot of individual stocks starting to shape back up. And that could, along with the follow through day, those would be some signals that we'd be looking for to get more aggressive in the market. But right now it is pure capital preservation mode, focusing on keeping that drawdown small and just waiting for when the wind is at our back because it clearly is not right now. Take a look at some other, just big sectors. Semiconductors look like they're in stage 4 now, just continuing lower, very weak bounces. Perhaps this could rally back up, but in my eyes, that would prevent a good ad spot to short into this 208, 210. As clearly this is breaking down out of the big base. And definitely has bearish tone to it. So we'll see what CPI brings tomorrow. That's pretty much most of what I got for today. And last thing I wanted to show is this chart of the VIX. Historically, the VIX tends to top in mid-March along with S&P trying to find support. So I covered this like last week, just talking about the seasonality. I think these are good charts to keep handy. In case this starts to play out and the market starts trying to find a low in March and sometimes tends to lead to a nice rally into the beginning of May. So keep an eye on that. That is all I've got today. So that is going to wrap it. As always, like to hear from you. My email is connor@revereasset.com. And you can always reach out to Dan or Don at revereasset.com. Phone is 855-REAL-WEALTH, 855-732-5932. And if you're ever interested in becoming a client, as always, please reach out. Thanks for listening and have a great night.